Hey guys, a very good evening to all my crypto believers. So, have you all been curious about what's happening in the market? Don't you worry, the coin monks got you covered. Okay, so before starting with the updates, let's quickly quote today's headlines. Risks of DeFi hacks can magnify as we head into 2022. Here's why. Hacker steals $140 million from Polygon gaming platform, NFT marketplace Vulcan forged. German savings banks will consider crypto trading for customers. 90% of all Bitcoin has now been mined. So let's start off with a refresh feed. Firstly, it is not hidden that this year DeFi has been one of the most rapidly rising categories in the crypto industry. Bad actors have taken an interest in this space, which has resulted in around 200 DeFi hacks over the course of the year. However, some industry experts predict that it will only get greater in 2022. Let's have a look at what's getting cooked. After its hot wallet was purportedly hacked, crypto trading firm Ascent X lost $77.7 million in a cyber attack only yesterday. Vulcan Forged revealed earlier today that 96 private keys were taken from its crypto gambling environment, resulting in losses of about $140 million. Vulcan Forged claims to have restored half of the monies to the victims, but the remaining stolen tokens have been isolated. However, it appears that this is not the case. Benjamin Whitby of Credo recently stated, as DeFi activity continues to rise, next year will witness the world's first billion-dollar hack. However, at the time of my research, the Union Bank of the Philippines is dealing with another hacking report. Well, that's sad. The absence of restrictions, on the other hand, remains a key worry. Many DeFi goods and solutions, according to SEC Commissioner Caroline A. Crenshaw, are quite similar to items and functions in the traditional financial markets. However, DeFi, unlike traditional finance, is difficult to control, according to Hong Kong's securities regulator. According to Andy Meehan, Gemini's chief compliance officer for Asia Pacific, a global consensus on what DeFi is and what methods make the most sense for regulating the business is required. However, using current mechanisms created to govern the traditional financial system to DeFi is not the answer. So moving forward with our next segment, not our mandatory one, but the one surely the school kids who are interested in softwares would love. Yeah, I'm talking about hacking. So apparently a hacker used the Polygon-based site to steal the private keys of 96 crypto wallets and 4.5 million Vulcan forged native PYR tokens, accounting for almost 9% of the total supply of 50 million. Customers lost an estimated $140 million as a result of the situation. Let's find out what exactly happened. It's a dismal consolation that the corporation has promised to make impacted consumers whole with money from its treasury and stated earlier today that half of the stolen cash had already been refunded. PYR has lost almost 30% of its value in the previous 24 hours, falling from around $32 on Sunday to below $21 at the time of posting. According to firm CEO Jamie Thompson, the hacker was able to get access to Vulcan Forged's clients' semi-custodial wallets. The issue wasn't with Venly, the company's wallet solution supplier, but with a vulnerability in Vulcan Forged. What occurred is that someone hacked our servers, obtained the Venly credentials and utilized them to extract the MyForge users' private keys, says the researcher. Going ahead, we'll only use decentralized wallets so that we don't have to deal with this kind of situation again. For a game system with little momentum, $140 million is a huge figure. PYR is held in 6,501 wallets according to Etherscan, including those on exchanges. Axie Infinity Shard tokens, on the other hand, are held in 45,073 wallets. By targeting the community's whales, the hacker was able to steal an average of $1.46 million per wallet due to significant concentration of tokens among relatively few users. Vulcan Forged's market worth has dropped from $612 million on Sunday to $397 million today as a result of the attack. So moving forward with our next segment, savings banks, the most powerful financial organization in Germany, will vote early next year on whether or not to allow its clients to invest in Bitcoin. If it is authorized, the 50 million savings bank users will be able to purchase and sell cryptocurrencies immediately from the regular savings account. In Germany, public savings banks known as Sparkassen are ready to vote on whether or not to allow its clients to trade cryptocurrencies. The election is set for early next year. Sparkassen are publicly owned and run savings banks with around 50 million users in Germany. According to a story published by the German news outlet Capital, a previously secret pilot program that would allow account users to buy cryptocurrencies straight from their bank accounts will be needed to authorized by savings bank committees early in 2022 if it is to be implemented debated widely. A first version of the idea might be implemented later in 2022 if the Sparkassen committees accept it. According to the Capital Research, several prominent German banks are lagging behind Sparkassen in terms of their crypto adoption roadmaps. Over the last year, Germany looks to have become more welcoming to crypto trading and investing. A new regulation was approved in July permitting German funds to invest 20% of their assets in cryptocurrencies, allowing more than $400 billion to pour into the market. Coinbase had just been permitted to hold Bitcoin in Germany for a few days when this happened. On German stock exchanges, crypto-related goods have seen strong trading activity, and this latest supply on the upcoming savings bank vote reveals institutional interest is still growing, particularly among conventional financial players. So wrapping up with our final segment, 90% of the total supply of Bitcoin has now been mined. There's only around 2.1 million Bitcoin left to mine. Imagine a day when it'll all be mined. Well, excited? So let's have a look at the present scenario. According to the current issuance schedule, Bitcoin block 714032, which was mined at 2326 UTC, rewarded its miner with 6.25 BTC. 90% of all Bitcoin has now been mined as a result of the latest release. The block boosted Bitcoin's circulating supply to exactly 18.9 million BTC. That implies just 10% of the expected total supply of 21 million coins remains to be manufactured, a process that will take tens of years to reach the maximum. According to Blockstream CEO Adam Back, it emphasizes the fact that there isn't much Bitcoin left to mine. Surprisingly, the timing for the increasing hardening of Bitcoin as an asset class could not be better, with quantitative hardening serving as an antidote to excessive fiat quantitative easing through monetary supply inflation. If all Bitcoin miners had always taken the entire block reward, this milestone would have been achieved 32 blocks sooner at 714,000. According to CASA CTO Jameson Lopp, less Bitcoin were brought into circulation since some early miners didn't collect the complete subsidy. While Bitcoin's supply limit is established at 21 million, there are several reasons why it will not reach that precise number. Not all incentives have been claimed. The restriction that 50 BTC produced by Satoshi Nakamoto in Bitcoin's Genesis block cannot be spent, and a few early infrastructure problems. There also has been a significant amount of Bitcoin lost, with some estimations reaching as high as 3.7 million BTC. However, because these coins are not technically unavailable, they remain part of the circulating supply. So we will now wind up with the assessment for today evening and meet you all tomorrow with even more interesting stuff. Until then, you may consider joining our Telegram channel for free crypto signals. Visit our blog linked below for guides, reviews and tutorials, and subscribe to the channel and get daily updates about the crypto market. Lastly, with this little favor of coin monks, we hope you stay updated. Thanks for watching and have a nice day ahead.